Hello friends, this is Vivek Bajaj, co-founder StockEdge and Elearnmarkets. Welcome to yet another episode of Face to Face. Again, I got an opportunity to record a face-to-face offline in Calcutta, and this is another going to be amazing face-to-face. So as you can see, it's going to be in English because the guest today, he has come from down south and he is mostly comfortable in English. So I don't want to put pressure on him to speak in Hindi. तो मेरे दोस्त जो हिंदी सुनने में जिनको अच्छा लगता है, हम लोग स्लो जाएंगे ताकि आप समझ पाएं और कोशिश करेंगे तो आप समझ लेंगे, कोशिश कीजिएगा. We will go as slow as possible. And for friends who may get irritated with this slow pace, you can change the setting to 1.25 if you feel like, so that you can listen to our video in the right pace. Well, this is going to be very interesting. As I said, another face-to-face, and today we are going to talk about gaming. Gaming, yes. I'm sure you must be surprised कि what is sir saying that आज market नहीं बात करेंगे, आज game की बात करेंगे. No, today I'm going to talk about a very interesting perspective about how a gaming background or looking at a game, and a lot of you would be gamers also, looking at a game and using similar kind of a thought process in market. Not saying that market is a game. I've always said that market is not a game, but similar kind of a science using in the market and to make consistent money. And today I'm going to also talk about intraday trading. Yes. After a long time, I have an opportunity to have someone who does only intraday and does very well. So I'm going to have a very candid conversation with him and talk about intraday trading. So guys, I'm sure you're going to love it. It's going to be a long video, as I always say, because these are serious contents, less entertainment, serious content. So you have to stay till the end to get the complete essence of the intraday trading. Well, let me welcome my guest who have come all the way from Bangalore, Shreyas Bandi. Hello.
Thank you so much for having me, Vivek. It's a pleasure. You guys do some excellent work here, and it's a great opportunity to be a part of this. And I hope, for your viewers as well, there are some good takeaways from today's talk.
Absolutely. I'm sure. I'm guaranteed. I've been interacting with you for almost an hour, and I know that you're going to give your best and you have so much inside you. So I'm going to be my best and take as much from you as possible. Absolutely. Yeah. So Shreyas, as you know, the format of face-to-face, we want to know about you first. You are a young guy. In fact, you look much younger than your age, which you mentioned to me. So first of all, I want to get the secret out that how are you so young? And also obviously your market journey. When did you start and how are you doing? And friends, he's also going to share his P&L with us. So he's going to log in into his Zerodha account and he's going to tell us exactly how he started and today what kind of capital he has. So very genuine trader. You're going to love the interaction.
Absolutely.
So tell us about you.
I get this very often, Vivek, but I'm almost 30 now and I look very young, but I've been in the market since 2017 as a full-time trader.
Okay.
Prior to that, I have a background in finance. It's what I studied. So when you're in finance, in those circles, you're always interested in the market. But I don't think having a background or an education in finance gives you any kind of an advantage in the market, to be very honest. And after my master's in 2015, I was working for Cisco Systems. I was a business analyst there. And at that point, I was also a very avid gamer. So I used to spend all my evenings and nights gaming. Eventually, just so happened that that interest in gaming switched to online trading. So online gaming to online trading. Awesome. And so that's how I entered the market. Around 2015 is when I started trying my, game in the market. I had a very simple strategy in the beginning, and it's a novice strategy that everyone uses. Basically, if the market would gap up, I would sell. Whatever stock gaps up, I would sell. Okay. So mean reversion, basically. Okay. And if it would gap down, I would buy because somebody will book profit, right, in either direction. And if the trade went against me, I would average the trade. So I would start by selling 5 shares. If it goes against me, I would sell 10 shares. If it goes against me, I would sell 20. And eventually, it comes back in my favor a little bit. I'd book profit. At that point, I had 10,000 rupees in my account. In a matter of a month, it became almost 25,000 rupees. So I thought I'm some genius. I figured this out. Naturally, luck will run out. And very quickly, that 25,000 rupees became zero. But I was earning a salary that time. And this was me just trying things out. So it wasn't so bad. Then I got to know, no, it's going to take a lot of effort. It's going to take time to understand how to trade in the market. And that's when I started seriously putting in a lot of time, right? And slowly, few hits and misses. But eventually, I realized cash market is handicapped. You can't do much in cash market. One, you can't carry leverage position overnight. You can't take short position overnight. So that time I was using ICICI Direct as my broker, and you can't carry short positions overnight. So
but that is still valid, right? Even if you're using Zerodha, you can't carry short.
You can't even now today. Yes, correct. You cannot carry cash market short position. So then I started researching. Okay, what are the tools available? Because I mean, if I'm playing the game, I need to know the rules.
Yeah.
What are the tools available? What are my this thing? So that's how I got to know about futures, options, that you can create strategies in different ways. But the problem is with my kind of capital, it just didn't make sense. The quantities are so large.
And what kind of capital we are talking about?
So when I was in my testing phase, my total capital was not more than 1 lakh. So it was around 1 lakh rupees. You can't trade these instruments. And even if you trade, you can't do it in a structured manner, right? So that's kind of how I got into futures and options. And to scale, I needed to raise money, and to raise money and to know what I'm doing. So it took about 2 years. Around 2017, I managed to convince people, my family, and get 10 lakhs put together. And I started trading with that 10 lakhs. I showed that over some time I was doing very well. I was building confidence with myself more than anything else. That's when I was like, okay, I have to give this an opportunity to try and make this my bread and butter. I managed to add another 20 lakhs to the account. So 30 lakhs is what I infused into the account when I started out. And over a period of time, that is done really well. And today, after all my government obligations, taxes, and paying my share to everyone, it's standing at a little more than 5 crores. So that has been my journey.
From 30 lakhs to 5 crore.
Yes.
I mean, 30 lakhs when you started full time, obviously the initial capital was small, but that was, I think it was more of a testing capital.
Yes.
Real serious one when you left everything and you started.
Yeah, I left my job, I left whatever I was doing, and this became my full-time thing. And I had the support also to okay, let's give you an opportunity, because I was showing the kind of effort I had put in. So that's very.
Actually, let me just talk to you about this support thing. Because this is something which not many people discuss.
Yeah.
Especially in the stock market videos where everyone talks about strategy.
Correct.
But I think that support around you is very important to succeed. So when you're talking support, obviously the family support, and because that is one thing which drags you down.
Absolutely.
Especially Indian society where trading is still not that, a recognized occupation.
It's looked at in a bad way. Yeah. And it's not exactly, people are not confident to give their daughter in marriage to you if you're a full-time trader. So, yes.
The situation is still better. I remember when I got married in 2007, situation was really bad. It took me a lot of effort to convince them. But yeah, I mean, obviously things will become better and better because we'll have more role models like Shreyas to, convince the society that it can be a full-time occupation. So friends, a millennial loves to game, and there in the market made from 30 lakhs to 5 crore. That is the ideal profile we would like to interact with. So let me just, just for the comfort of my learners, let me just go through your ledgers in Zerodha and see that really 30 lakh has become 5 crore.
Absolutely. So Vivek, also what I started doing at one point of time is logging all of my trades and putting them up on YouTube. And also my trade book for the past 2 years, 2.5 lakh line items is available on a completely free forum where anyone can pull out my direct trade book from the broker and go through my trades. But I'll just go over these accounts. Initially, I was trading with ICICI Direct. I no longer trade with them. I only trade with Zerodha now. Right? So this is, we are going to any period of time. It doesn't make any difference. I opened this Zerodha account in 2018 roughly. And in futures and options, this account has made a profit of 1.5 crores.
Okay.
Yeah. And this is the same account that I traded with on YouTube as well. So people who watch my YouTube videos, they know I'm trading this particular account.
Shreyas has a very good YouTube channel. The name of the channel is NiftyBN.
Yes.
Right? Nifty Bank Nifty is like NiftyBN. Huh? So he does, he's a very, I think, realistic person. He records videos which are real. Without much entertainment. And I told him you should have some entertainment question also on the channel to get more people on board. But he said that no, I'm a realistic person, I'll stick to that.
In fact, when we started, one of the discussions between my friend Ravi and I was, let's stick to pure content and not have any noise.
I know.
And to people who helps, it helps. So I also, apart from F&O trading, Vivekji, I've also done like buying of equity. I just buy top quality names. So this will show as unrealized profit because I have used CDSL EasyEst to transfer the shares into my other account, which I will go over. So this is one account that I was trading.
So cash market, that means whatever money you make as a trader, you allocate certain percentage of that in investment?
Absolutely. So what I try to do is on a monthly basis, at least 50% of what I made through trading, I put into the market. I also try to do it, like for example, when we were heading higher, once we crossed 17,000, after that I stopped all my buying because it just didn't make sense to me to buy above 17,000. Now that we have started correcting, and whenever I buy in cash as well, I post on Twitter what stocks, what ETFs, what I'm buying, and it's the most basic investing you will find. I buy top quality names, top quality companies, good management, good growth, and I just allocate my money there and I let it sit. In fact, I've never sold my holdings. I've never sold, and that will actually show here as well, wherein I'm still holding the thing. So this is the other account that I was trading. Right here again, equity unrealized. I traded these accounts only till April of this year, where I set up a company account and have now shifted all my trading there.
Right.
So I'll go over my company account. This account was set up in April of this year. In fact, if you go to my holdings, all of my holdings have been transferred from my other accounts to this account.
Okay.
And basically, if you check it, look at any one, you can see the tags. All the buy dates, the first buy date will be in April.
Okay.
So all of this stock has come to my account in April. So I continue to hold just top quality names. I have about 40% in debt and gold and the other 60% in stocks.
And you pledge this liquid Bs and Nifty?
Yes, I pledge everything I have, and that gives me my trading margin.
Oh, so all these cash stock you have, you're pledged?
Absolutely. So this is a way of generating that little bit of an alpha, wherein my portfolio will also grow. And my portfolio is not that it is all in equity. It has a good balance of debt, gold, and equity. And apart from that, I also trade with that margin. So I don't feel any pressure to make money on that margin because my investments are as it is making money for me. So
got it.
So that is the thing. And
but I'm just curious to know, why did you convert this into a company?
So there are a few reasons I converted this into a company. In my individual name, as your income goes over 1 crore, you start paying all kinds of cesses. And you pay a huge income tax bracket. It was for me, it was working out to close to 40%. I mean, all put together. And that is very, very high. And as an individual, I can't show that many expenses. I can show some basic stuff. As a company, and people might have different ways of doing this. Everything I buy can be an expense. I've traveled here. The flight tickets are a company expense. If I stay at a hotel, company expense. I go to a resort for a vacation, it's a company expense. In fact, if your CA is good, anything as basic as the clothes you wear can be a uniform to office. And that can be a company expense. And the tax bracket is in the 25% for companies. So if you're starting to trade a large account and you're starting to make profit which exceed 1 CR, 2 CR, then you want to be in a company account so that you can bring down your tax liability.
Absolutely.
Not only the lower bracket, but also all kinds of expenses. My office rent, my internet, my electricity, everything can be routed to the company. So that way I save on the money I pay to the government.
Actually, this is such a business-like approach which you have taken, that for you, tax planning also becomes so important. And as a businessman, I know people always talk about strategy and making money, but all these small hacks of saving money by reducing your tax incidence, etc., is such an important thing. So good to see that you are building a business for yourself, not just being a trader.
Absolutely, Vivekji. So this is the account where I'm trading in my company's name. And you can see this company was set up just here. You can see in the entire period, the realized profit and this thing, and equity as well. Currently, from when I transferred my shares to whatever period, you see, it will be the same because it's all unrealized at this point of time.
So how do I see that your current capital base is 5 crore?
So you can see here in my account value curve, So this is where I added.
Oh, okay.
Yeah.
Got it.
So in the beginning of the financial year, you can see that I basically liquidated the other two accounts that I had, transferred everything here, transferred the shares as well. You can see at the beginning of the financial year where it is. And every month, Vivekji, I cash out about 3 to 5 lakhs for my expenses and to show in different forms of expenses.
Right.
I cash out every month. So here you can see the growth in the period from when this account has been set up.
Okay. So why is this dip?
So here this is called a quarterly settlement. So you can see there's a payout of 1.72 crores. And then I have to transfer it back. I transferred 1.71 crores back.
So genuine. This looks so genuine.
Yeah.
Super. So very interested to know how you make money from trading. And also I'm interested in knowing how are you creating wealth through cash investments.
Absolutely.
Because that is what I exactly did during my initial phase. And now I am more cash market person because obviously my capital base is bigger.
Yeah.
And we have discussed that being an intraday trader is so difficult to deploy large capital.
Absolutely.
So eventually you have to become a swing trader or a cash market trader.
Absolutely.
So we'll discuss that.
Yes.
So great. Good to have you here. And this is quite genuine. So it's good. Let's continue with your presentation and let's discuss few things.
Yeah. So Vivekji, today I'm going to talk exactly about what you said. So I'm going to talk about my intraday trade. I was initially an intraday trader. I became a positional trader of sorts. And I've now gone back to almost doing purely intraday along with cash market buying.
Oh, right? From intraday to position to intraday back?
Yes, that's been the journey. And my way of looking at the markets is that I don't spend too much emphasis on the analysis. I spend more emphasis on the risk and reward. So every day that I trade, before I trade, I know one thing for sure. What is my maximum stop loss that I'm willing to take? So each day I assess, and I will go into excruciating detail of the trade. I'll go into every single minute detail. And all the questions you have, I look forward to because I want to put as much. It is very simple approach. It is an approach wherein you try to ensure that regardless of what happens, you make some money. You have a high probability of winning. But when you lose less money than what you would have otherwise won. So that is my approach.
Okay.
And today I'm going to also try and talk about the markets from the perspective of probabilities and outcomes and how to look at the market purely on the basis of mathematics. Right? So that is the plan. And the math is very simple. It is extremely easy for anyone to understand. All you need is third standard mathematics and you will get it. And so hopefully, please don't get scared by because there is math, some people automatically say, Ravi, maths will be there.
No, people are never scared on face-to-face because they know that there is an idiot here sitting and he'll ask all kind of idiot questions which will give them answers. But today, market is open, by the way.
Yes.
And you came on weekday during the market hours on Monday. And he doesn't trade on Monday, and there is a science behind why he doesn't trade on Monday. But we're going to see live market and we're going to see how you will approach probably today, if at all you are trading today.
Absolutely. Yeah. So we will do that as well.
Good.
So Vivekji, I told you I'm a gamer. So first thing I would like to do is play a couple of games with you, small games, just to understand the concept of edge, right? And because these days edge is used very often, a lot of people talk about edge. But edge is basically, they say this is my advantage in the market. That's what they try to convey. But edge is purely mathematical. I want to just break down that. This is not at all very complex. It's very simple. So I'm going to talk to you about the game of coin toss. Which you have 1 lakh rupees with you. I have 1 lakh rupees. Each time we'll toss a coin for 1 rupee on the bet. If we played this for 2-3 years, what do you think would happen between my account and your account?
I think we both will have 1 lakh each.
We will both have 1 lakh because it is very simple, 50-50.
Correct.
Now, basically, there is no edge in the system, we can agree. Even in common language, we can say there is no edge in the system for you and me. Edge is when you can have a positive expected value.
Edge is when you can expect, sorry, come back.
Edge is when you can have a positive expected value. An expected value means that for every bet that you place or every investment that you make on 1 rupee, it needs to have an expected value of more than 1 rupee.
Sure.
Right?
Logical.
So, the expected value in this game, I will just tell you how to calculate. The probability of me winning or you winning is 50%.
Correct.
0.5.
Correct.
Right? And how much do you win when you win? You get 2 rupees back. Your 1 rupee and you get the additional 1 rupee profit.
Yeah.
So, expected value is 0.5 or half multiplied by 2.
Right.
Which is 1.
Which is 1.
So, you have neither a positive edge nor a negative edge. If this was 1.05, you would have positive edge. If it was 0.95, you would have negative edge.
Got it.
Very simple, right?
Very
so
simple.
I want to apply the same concept to a casino game, because today I also will be talking about how to look at the market from the perspective of a casino. Truly and completely, right? So this is a game of European roulette. Vivek sir, have you played this?
No.
ठीक है. So I will explain this. People might have seen in movies or in casinos if they have gone. The table, it has 37 numbers from 0 to 36. You can see some of them are red, some of them are black, it's odd, even, all kinds of combinations.
Yeah.
Basically, the dealer will roll a dice on the wheel.
Okay.
Whichever number comes, wherever it falls, that is the winning number.
Sure.
Now, isme you can bet in many different ways. You can bet on red or black.
Okay.
You can bet on odd or even.
Yeah.
You can bet on the first few columns, the last few columns, rows. You can bet on 4 numbers. But the trick is that depending on what you bet, your payoff also varies. Like for example, if you bet on a single number, you bet 1 rupee. If you win, I'll give you 36 rupees.
Oh, because single number probability is so low to come, that's why you get more.
Correct. Because here the probability of single number would be 1 by 37.
Correct.
One number out of 37 numbers. And if you bet on, let us say, red or black, then I will pay you for 1 rupee that you bet, I will pay you 2 rupees. Because you have a higher chance.
So it's a half red and half black?
So there are 18 red,
Okay.
18 black, and 1 green 0.
Oh.
The whole funda as to why the casino makes money is that 0. But before we go there, I want to accept a bet from you, Vivek sir. You bet on anything, whatever you
bet
feel.
17.
You bet 17. So you bet 1 number.
Yeah.
What is the probability that your number comes?
No, but I am betting on 17, which is a number, and also black.
So those are 2 bets
So
you're
I have
playing.
to mention this, that it's a bet on black.
But those are 2 separate bets. Let's go with 1 bet for
So let's go
simplicity.
with 17.
17.
Yeah,
It's 1 number.
Yeah.
And that means that 1 out of 37, chance of you winning, there's 1 number, 37 numbers, is 1 by 37.
True.
And I will pay you 36 rupees.
Yeah.
So same expected value जो हमने बात किया था, the 1 by 37 multiplied by 36. कितना मिला आपको? 36.
36 by 37.
36 by 36.
Which is less than 1.
Which is less than 1. Which means you have a negative edge in this of 1 by 37 or 2.7%. Yeah, casino has a, matlab for every rupee that you play this game, if you play 1,000 games, har rupee ke bet pe you will lose 2.7 paisa. It is guaranteed. You might win 50 times in a row, but finally you have to give up that money. There is a hard edge.
That's why these bugger casino guys, they make so much money, huh?
They always make money.
Because we don't have that edge and they have that edge.
They have that edge, right? And so same concept, and finally I'm going to wrap up this games part quickly so we can get to the market. These are the bookies odds. Vivek ji, I believe the best way to know the outcome of an event, even if you're not a punter, you're not into betting, is to look at the bookies odds. When you want to see elections also, if elections come up and you want to see who is going to win, exit polls ka chhod do, you look at what is the bookies odds.
Okay.
Because when somebody is putting their money on the table, that is where you know the highest chance of predicting an outcome.
Absolutely.
Because money is the best way to predict.
Absolutely.
So here is a bookmaker, and I want to talk about the thought process of bookmaker.
Yeah.
Bookmaker is like whoever wins in this India versus New Zealand match that was there, he wants to make money.
Yeah.
He doesn't care if India wins, New Zealand wins. He finally wants to make on every rupee bet that he accepts. 2 paisa, 3 paisa, 4 paisa, 5 paisa he wants to make. So the same way we can see what the bookie's edge is here. If you were to see India's probability of winning, 65%, 0.65. If you bet 1 rupee on India, you get 1.47 back. Meaning 47 paisa profit. If you multiply the two, you will get a number of 0.95. So bookie has a 5 paisa edge.
But we are always shown this number 1.47 and enticed that if you put 1 rupee, you will win 1.47.
Exactly.
But actually, odd is not in our favor.
It's not in your favor. So, for example, let us say you bet on New Zealand. For 1 rupee, you're getting 2.8 because they are the underdog. But idhar bhi, if you take the probability of you winning, which it is showing New Zealand 35%, 0.35, multiply that by 2.8, the number you will get is 0.97, which is less than 1. So whether you win or not, he is going to make money. Bookie is going to make money because he has a statistical edge in the pricing of his bets.
But tell me, in market, I mean, this is quite interesting because then the market maker is actually making money.
Correct.
Because the bookie or the market maker is giving you both side quote.
Absolutely.
In stock market, exchanges obviously are not the market maker. They are just a platform.
Correct.
Who is the market maker? Who is that bookie in stock market?
We'll get exactly to that now, Vivekji. So we have the advantage of being in live market. So we can pull out the live market as it is right now. I will pull out the option chain.
Oh, we are going to discover the bookie today?
Yes, we are going to discover the bookie today, and we are also going to address probably one of the myths that people have, that if you are on high probability trades, that you are the bookmaker and that you will make money. We'll address exactly that here. So today market is flat. We are at 17,000. We gapped down. From there we pulled back to 17,000. And I want you to look at this as a betting board. And I'll tell you how to look at this as a betting board.
Okay.
For example, let us say you want someone who has a high risk to reward. You want to make a lot of money on your bet.
Yeah.
Let us say do you think the market will go up or down, sir, from here?
How will I know that?
Just make a random prediction and we'll work from there.
It's actually market is in a very different, I don't know where the market.
Okay, let's say randomly that the market is going to go down.
Yeah.
We feel we want to. How do we know what is the bookie's odds?
Okay.
To find out the probability.
Yeah.
Right now, let us say you feel that by expiry, market will expire around 16,700.
Okay.
Or below 16,700.
Okay.
Right? Right now, one way of placing your bet would be to buy the 16,800 put option for 46 rupees and sell the 16,700 put option for 30 rupees. You will be paying about 15 rupees.
This is which expiry?
This is the current December expiry. December expiry.
December.
So how much money will you be paying? You will be paying about 15 rupees.
Right.
What is your max profit?
Max profit is 100 rupees, right?
Yes, 100 rupees. So 85 rupees will be the profit that you make. 100 rupees is what you will get back.
Correct.
So the odds is very simple, how to calculate the odds. Basically, if you were to, for simplicity's sake, let us say 7.5, 1 in 7.5. Because if your payoff is going to be 7.5 times your money, then roughly 1 in 7.5 is the probability that it happens, that particular event happens.
Okay.
Right? So similarly, one other way of looking at it is the delta column. Delta gives you the rough probability that a particular strike is at the money at the time of expiry.
Yeah.
Right? But this is, let's forget all of this for now.
Okay.
There cannot be, if you look at this from the same expected value concept, if you go by risk and reward, there cannot be a positive expected value for anyone here, because you can be on the buying side of this probability or the selling side of this probability.
Okay.
Matlab, you can either buy the put option and sell the lower put option, place that bet, or you can take that bet.
Okay.
So inherently there is no edge in selling or buying, but edge can come from your risk to reward. Like, let me put this simply. Let us say you're paying 15 rupees.
Okay.
Today intraday.
So I have executed the strategy. So I bought a put option, I've sold a put option.
Correct.
So I have paid 15 rupees. Right?
Correct. Let us say you've executed it, and what you decide to do is that if it goes to 10 rupees intraday, you take a stop loss.
Oh, that 15 rupees, I'm not thinking of letting the whole 15 rupees go.
Correct.
I'm saying that 15, when it becomes 10, then I will execute the stop loss.
Correct.
Okay.
Or if it goes to 25 rupees,
Okay.
you book profit.
Okay.
Then you can create a positive edge here. As long as, see, there is no intrinsic edge in selling options or buying options. Mathematically, that makes no sense. People who say that I sell options, that is my edge, because of that I make money. What they mean to say is most of the time they've made money because it's a high probability trade.
Can you please explain this concept again to me? When you say that there is no intrinsic edge of being a buyer or a seller.
Correct.
But different people have different style. For example, we know some people who are very active sellers, they make money and they claim that they are very good sellers and they make money because of that, as you rightly said.
Correct.
But then we had Asit with me a couple of days ago, and he's a buyer and he has an edge there.
Correct.
So I can correlate your statement that every person has some edge, but there is no intrinsic edge in the market.
Correct.
Can you please explain this?
Absolutely. So let me put it this way, Vivekji. For example, right now the same trade that we looked at. So it would be buying the 16,800 put option now at 45 and let's say 45.
Yeah.
And this selling the 16,700. The probability of this event occurring is not 1 in 7.5, 1 by 6 times roughly, you can say, right? So 1 by 6 times, most of the time that trade is going to lose you money if you hold till expiry, which means 5 out of 6 times you're going to lose money on that. Only once you will make money on it.
Okay, got your point.
So if you go by the same expected value,
Yeah.
the probability of you winning, which is 1 by 6, but if you're able to convert the entire 6 times on your money, then there is no edge because it becomes 1.
Yeah.
You're not getting, because as long as you go by the probability as an inverse of the payoff, there is no intrinsic edge in buying or selling. It just means that you are taking a trade which is supposed to lose you money. And as somebody who is accepting that trade, you are taking a trade which most of the time is supposed to make you money.
Okay.
But there is no value that is coming over than 1 in terms of your expected value. Now, this gets a little bit this thing.
How did you calculate the value less than 1 in this case? Can you tell me the number? You said 1 by 6.
Let me look at something that comes to something a little a round number. Okay, let's take the 16.
Say for example, that was a round number 15.
Huh.
So when you bought and you sold, it was a 15 premium which you paid.
Correct.
So how is that payoff less than 1?
Okay, so basically 15 divided by 85, that gives you the probability of the entire event occurring.
Oh, okay. Just like what we did in case of coin, in case of that roller game.
Correct. Let's, for simplicity's sake, say you paid 10 rupees credit, and your max profit is 100 rupees, 90 rupees, 100 rupees spread.
Right.
So basically, the chance that you win, if you're being paid 1:10, the chance that you're winning, roughly you can say also is 1 in 10.
Yeah.
Win that maximum money I'm talking about, not anywhere in between.
Yeah.
So from there, you can say that, okay, if the probability of the event occurring is 1 by 10 and your payoff is 10, then 10 by 10, like you multiply 1 by 10 into 10 rupees, you're getting 1.
Right, right.
So there cannot be any intrinsic edge in this.
Correct.
Right? The edge has to come from somewhere else. So there is no edge in buying or selling. But if you have, for example, a particular system that tells you that you buy this at 10 rupees, you buy this particular spread at 10 rupees. If it goes to 8 rupees, you take a stop loss. And you can take a stop loss, Vivek ji, only when the market is live. You can't take a stop loss when the market is closed.
Right.
Right?
Right.
Or when it goes to 12, you start trailing your profit. It goes to 14, you trail your profit. So when you win, you always win more than 2 rupees. Let's forget everything else. You and I take a trade. We don't know, 50% of the time we might be right, 50% of the time we might be wrong. As long as we maintain a positive reward, we're able to let our winners win big and let our losers cut them small, we will make money. That is the only holy grail according to me in the market. I think one of the main reasons I have been, and I also tend to be somebody who takes high probability trades. I think why I have survived in the market is whenever my high probability trade starts to lose, I'm out. I'm out faster than anybody else. I run away from there and I come back the next day because I'm an intraday trader. I can just cut my position whenever it goes against me and come back. So that is there.
Just small clarification. Again, I'm stuck there, but don't mind if I need more clarification. So when you say that in that same example, so max loss which you have is 10.
Yeah.
Right. But your reward is not 10. Your reward actually is 90. You are placing a bet for 10 to get a 90 reward.
Correct.
Then that number is 9. It's not less than 1, right?
So you have to think of it as what comes back to you. Even previously, look at what comes. You put up 10, but you're getting back 100. Your profit is only 9.
Yeah.
Even in the coin toss, you're getting back 2. Yeah. So it's called return to player. Actually, the concept is called return to player. How much comes back to you? So there's no edge in it because it is a 1 in 10 bet. It's a 1 in 10 bet that you book max profit on it. But at the same time, what is coming back to you is 10 times of your bet, including your bet.
Right.
Yeah. Right. So it becomes 1 by 10 into 10.
Right.
Which is 1. There is no positivity on it. And even if you're selling it, if you're for example, you're selling it, the same probability applies to you.
So basically you are saying that if I hold on to this position the way it is, because market is always considering expiry. Yeah. So this price which you are paying is assuming that you will hold on to it till expiry.
But you can choose to or not. That's your decision.
So what you are saying that we should choose to not hold on till expiry based on our risk and return profile, right?
So that depends on you, sir. So you can structure your trade based on your rules and your system and whatever you've built. For simplicity, we are thinking of holding till expiry, but actually your trade might be 1 rupee stop loss.
Okay.
And a 2 rupee or a 3 rupee target. That can be your trading style, right? Or that will also work. Somebody else might say, no, I'll keep a 5 rupee stop loss and a 10 rupees target. The only thing is that you need to make more money because you have to also cover charges in that. You need to make more money, then you lose. It sounds a little too simplistic, but really in trading, that's all there is to it. When you make money, you need, first of all, you need to be able to control your trade. If you don't, if the market is not live, you don't exactly have complete control over your trade. And secondly, if you can control how much you give up, and when you make profit, you're able to make more than that, that's what will make you money. And I'll get into how that affects my trade as well. Now, there are two ways of looking at this. When people say I have an edge in option selling, there is some truth to it. With option selling, because it's a high probability, you can build an edge around it. For example, if somebody says, I'm an option seller with risk management, and that is my edge, then that risk management does give them an edge. It's not the option selling that is giving them an edge. It is the risk management. Like for example, many people, they take certain option selling trades, and what they do is if it goes against them beyond a certain parameter, they have a stop loss.
Right.
That stop loss is giving them the edge. Because if they didn't have that stop loss, they can't. And I want to talk about something else also. Just last Wednesday, market was around 16,700 thereabout. The 15,000 put option and 18,500 call option, so 3,500 point strangle, was giving you a 1% return. It was giving about 20 points. 20 points on the Nifty on a strangle, it equates to 1% return.
Right.
So I ask people, okay, why is it giving you such a large return? You know, such a large position. Many people are like, okay, you can take this kind of a trade. The thing is, there statistically, almost always you are intended to make money. Right? You will make money all the time. But the one time that it goes against you, and many people say, I will do adjustments. So many people talk about monthly option selling, where they sell 2,000 points up, 2,000 points down, and they're able to return 3, 4, 5, 6%. They can do this. What they never consider here is, this is like having a bag with gems in it, like blue, 999 blue gems and one red gem. So every time since blue gem is coming and you're making money, you're thinking that there is an edge there. There's no edge there. It's just that the statistical time frame is so small that the entire probabilities are not playing out. The same trade, Vivek, if somebody were to take that 15,000, 18,500 and we hit two lower circuits, whatever margin they put up, 5 times more than that they will owe to their broker. So that's why I'm not against positional selling, but I think when new people have come into the market, it's very important that you understand the complete risk. If somebody is paying you more than the risk-free return, when banks are paying you not even 5%, if somebody is paying you 1% in a week, then it's important to understand that there is a corresponding risk. And we should be aware of all that. So anyway, I want to now sort of get into my trade, right, and how I structure it and how I feel I've been able to keep that little bit of a positive edge. And this is purely intraday. So it starts in the morning, it ends by evening. I get peaceful sleep. If markets open randomly somewhere in the middle of nowhere, no one will be happier than me, because it means that the volatility would have gone through the roof and I can take advantage of that with my trade. So
that's interesting. So in fact, what I'm learning from you is that because of this probability framework, you believe intraday is working well for you because you have defined an edge there.
Yes.
Because, so see what happens, a typical retail or someone who is new into the market will always look at this option chain and look at these big numbers, 40, 30, 25. But what you are saying that these numbers have no meaning.
Correct.
Your intraday strategy can be around these numbers, but your risk management can ask you to square up faster than what these numbers are asking you to do. Exactly. Ideally, these numbers are telling me that don't square up. You take that 25 rupees, take that 30 rupees.
Correct.
But you are saying that I am not here in the market to take that 25 rupees. I am here in the market for a maximum loss of 4 rupees and take 10 rupees. Exactly. Because that is more important rather than these 40 rupees.
Absolutely. That is the exact thought process. And the way I look at it is, I am very much in control of what is, I see, Vivekji, my trade has a little bit of discretion in it. I'll go over the rules for the discretion also. But there's only one thing that is systematically perfect about my system of trading, my approach to trading. I know at the beginning of the day, because having traded this, I have a good estimate of how much I stand to make when I enter my trade, and I'll go over how I make that prediction also. And that is where I take half of that and define that as my max loss for the day. For whatever reason, no matter what happens, once that loss is hit, my trading is done. After that, I will see many opportunities. ऐसा है कि जब stop loss is gone, my mark-to-market stop loss is gone, I'll see many opportunities to take re-entry, but I don't. Because my idea is once what I have decided, then that gives me a lot of confidence. Sometimes when people look at my trades, and there are times where I'm trading 50,000 on Nifty. That's my sizing at times. People say, boss, that is scary. What if something happens? Like, nothing can happen because I know that I'm exiting here. It doesn't matter till where it goes. I have a specified stop loss. I know how much I'm willing to lose, and that is how it works. So
interesting.
Yeah.
Let's go through your system. I'll get more clarity then.
Absolutely. So my system is basically, Vivekji, I accept bets on both sides. Okay. I accept bets on both sides because the way to look at it is, as an individual, as a person in general, I prefer having a high win probability. Okay. I want to win most of the time because as human beings, I think they're psychologically programmed that, we should win, and that'll keep our morale high and confidence high. But at the same time, when I lose on that high probability trade, my idea is cut those losses quickly.
Okay.
So what I try to do is, for example, I will go over my analysis. There are three things that I analyze. I analyze the charts first. I look at the open interest, and I look at the pricing of the options itself. Okay. So pricing of risk will also give away a good amount in terms of what can be the market volatility. So I will just go over now. Let's, for simplicity's sake, look at it on a 1 hour time frame. Even if you know nothing about technical analysis, anyone can identify the swing highs and swing lows.
Correct.
Right? So let's look at the basic swing highs and swing lows. We can say this was a swing high. Right? This was a swing low. This was made in a bit of a panic. But and how many days in this? Just look at the past 10 days maybe. Not more than that.
Okay.
And the closer the date, the more important. Any particular swing, the closer, the more important. Now we can say that, okay, here also we can see 1, 2, 3, 4. Many times this has acted as a particular level, right? So we can mark that as well. And on the downside, this zone, once again, right? 1, 2, 3, 4 we can see. Now this has roughly given us what range Nifty is trading in.
Okay.
Right? Nifty, we can say the super broad range is 17,600 and 16,400. Okay. Right? And we can say that, okay, otherwise the range that we can work with is about 16,850 and on the upside 17,300.
Okay.
Right? What I want to do is above this and below this, these two particular lines that we have marked, I want to try and sell options there.
Okay.
So what ends up happening is those options will most likely be trading in a downtrend. Yeah. Right? It is very simple, and they will not react too quickly to the movements. If we trade here, if we trade at the money or close to money, especially when the implied volatility environment is low, then there's a good chance that we get pushed out. If you're trying to play both sides, it becomes too aggressive when you're too close to the market. So I try to sell above this line and below this line.
That is because of the delta, right?
That is because of the delta, because there will be higher delta the closer you are to at the money. So that is one thing that I look at. The second thing that I look at, and this will come to why.
So when you say you play, that means you sell.
I sell, yes. So I'm taking a high probability trade. So I'm selling both the options.
Okay.
I'm selling both the options. I'll get into exactly which options I select. Second thing I want to look at is the OI. And now here intraday OI gives us how the market has been positioning. Now today we had a gap down opening. From there we have seen very strong put writing all the way till 17,000. Right? So that shows you that people who are writing these put options, they believe the downside is limited. And that's why we can say that, okay, market has, after the gap down, continued to move up. The second thing to look at is point of maximum congestion. This is from the overall OI. Point of maximum congestion is nothing but the point where there are maximum number of call plus put.
Correct.
OI.
Correct.
Market has a tendency to always move towards this point of maximum congestion.
Right.
If the market, like for example, in my trade, if I want to create a bias, I will always create a bias that the market will move towards the point of maximum congestion.
Okay.
So if we gap down, then I will have bias as a good chance that we get pulled back till the point of maximum congestion. Now, as we head higher, my bias would be that no, we'll come back to point of maximum congestion. And also, we get to see that where majority of the market is positioned. For example, let us say there was big 16,800 here and 17,200. I want to sell strikes which are beyond these.
Okay.
Because these are the guys who are first at risk. The thing is, by the time the risk moves on to the further away strikes, by then I would have long gone with my stop loss. So right now, from looking at maximum congestion, we also get to see what is the pricing of risk. Pricing of risk is basically the price of the straddle, sir. So right now, the 17,000 put option and 17,000 call option together are trading for about 250 rupees.
Right.
So the risk that market is pricing in is 250 points on the upside, 250 points on the downside. So that gives you an expiry range of 16,750 on the downside and 17,250. That
Correct.
is that you basically add and subtract
Correct.
from whatever that point is. Now, I want to ensure that whatever strike I sell is at least one strike away from here.
Okay.
So the minimum that I would want to sell is 17,300 on the upside and 16,700 on the downside.
Sure.
What this gives me is because my trade is only for the day. I mean, this is pricing all the way till expiry.
Oh.
My trade is going to begin and end today.
Okay.
So I want to be in a position which has a high enough probability that today itself it makes money for me.
Okay.
And I'll go over this as we this thing. And my trades also, I log them, I put them up. All the trade logs are available, people can see. So that is how I select my strikes. So in the morning, okay, so forget in the morning because the best time to enter will be in the morning. So after the first 1, 2, 3 candles, that is the best time to enter.
What size of the candle? 5 minutes?
5 minutes,
Okay,
yes.
okay.
5 minutes.
So that means after 15 minutes candle.
After 15 minutes, right? Sometimes as you spend more time doing this, you'll understand that there might be a advantage in entering in the first candle itself.
Yeah.
Because, for example, there's a big move. Generally, what happens is if there is a huge gap down, there is an increase in fear. In the first candle, there's a huge increase in fear. And based on the previous day pricing, see, Vivek sir, nothing comes without putting in work. You need to, I have been watching weekly expiry prices of straddle, 100-point strangle, 200-point strangle for 100 plus weekly expiry. So I've been watching it for, 100 plus weekly. So I know how the option at this much distance is going to behave simply from muscle memory of viewing it. This doesn't take genius. This is not genius. This is hard work. You need to understand that, for example, if a 300-point spread has closed at 60 rupees today, let's say it's a Tuesday or something, and next morning it's opening at 60 rupees or a little bit more than 60 rupees, I'll be happy to enter it in the first candle. But if it's opening at 50 rupees, then I will wait.
Got it.
Because whenever there's an increase in fear, you want to short IV into that. But what can happen, it can open at 60, it can expand to 70 before reducing. But that's why there is a defined stop loss, right? So there's always a risk and you need to specifically define before entering my trade. If I'm shorting a 30 rupee option and hoping to get, let us say 10 rupees on both sides to make 1%, 20 points, then I need to know that if it goes to 70 for whatever reason, I need to get out. I have to, because I've given up 0.5%, I need to get out. So what I would do at this point of time in the market, let me go. One more thing that I always like to do is have roughly equal premium in both my legs.
Okay.
Roughly equal premium. So let us say I want to sell any put option below 16,700 and on the call option side above 16,300. So I can actually sell these two strikes itself. This has 28. This will be my trade for today if I were to enter right
17,300.
Yeah, 17,300 because both are 250 points plus and 300 and 300. Right now this has 27 rupees. And this has 27 rupees.
Okay.
They are almost perfectly equal.
Okay.
Right? But the call option is only 250 points away.
Yeah.
Whereas put option is 350 points.
Yeah.
So naturally what will happen is in case there is an up move and if you are equidistant, then you will actually make a profit because the strangle is actually a bullish to sideways strategy. Because there will always be more premium on the put side because people are more afraid on the put side. But how I like to structure it is I like to have equal premium.
Okay.
In case the market moves up, first thing I want to define. So this is my trade. Before this trade, how much can I get on this? Today being a Monday, I don't get much DK.
Why?
The thing is, the way options behave is towards the fag end of the expiry is when most of the premium falls off. On a Monday, there are two reasons why. But first of all, it is away from the expiry. Secondly, US markets have not opened. We don't know what kind of volatility will play out there. So whoever is placing or accepting bets in the market will not give up too much value. Those bets will not give up too much value on a Monday. So on Monday, my preferred approach is to trade small sizing, keep a small target and keep a small stop loss.
Got it.
Right? What I would do is, for example, this is trading at 27, that is trading at 27. We are at 17,040.
Correct.
I will short both of these. How much I have received? I have received 54 rupees. With my understanding, I know that there's a good chance that by the end of the day, this ends closer to about 45. If nothing happens in the market. If
how did you make that number?
Because I've told you, Vivekji, I've traded the same options every day for a long time. So you get a good estimate as to, but generally you can make this guess that on a Monday, whatever let us say is at the money straddle should be at X price. I'll give you for the current volatility.
So what happened to this on Friday? Do you have Friday's data?
Yes. So on Friday, I posted this on Twitter. But basically, very simple, Vivekji. First of all, let us say I've received 54 rupees. And my idea is that I can make 9 to 10 rupees. So my logical stop loss would be how much? Based on what I've told you. 5 rupees.
5 rupees.
I'm willing to give up 5 rupees.
Yeah.
So what happens is, of course, the trade will keep moving. Right? The market will keep moving. On Monday, we had this, I entered on the first candle at 9:15. The reason I entered on the first candle is because the spreads, the same pricing that was available the previous day at close was available at open.
Oh.
Because suddenly there was an increase in fear. So there was no overnight decay. I entered in the first candle. But as soon as I entered, the trade went against me. The market started moving down. So the entire trade I put up here on Twitter. Basically, what I had to do is here, my call option which I shorted at 17,500 and my put option I had shorted at 16,600. I had to square off the call at every time, and the idea is you follow the market. So if my put which I've shorted at 25 has gone to 30, my call which I've shorted at 25 has gone to 21. I will square that off and move it to the 17,450 call because that has 30 rupees now.
Oh, okay.
And then the market continues to move down. I will square up that call option also and sell the lower call option. At all points, what am I trying to do? There are two things. One, I am trying to ensure I don't lose that 5 rupees. I can't, if I'm targeting 10 rupees, I can't lose that 5 rupees. Or if I'm targeting 20 rupees, I can't lose 10 rupees. On the overall, which means if I'm trading a size of 10,000, I can give up maximum of 1 lakh if I'm taking a 10-point risk. Meanwhile, I have to keep balancing my trade. It's purely about balancing your book. If one option goes to 30, other goes to 21, I have to square off that option and move to another option which is 30. In case or I need to square off this losing option which has gone to 30 and roll it down. There are only two things that can be done to this trade. You have shorted a put option and a call option. What is your goal? Your goal is 1, don't lose 10 rupees. 2, keep the premiums equal, almost equal.
All the time?
All the time. Basically, that is, and when to do it, when not to do it, that also comes, like for example, let us say we are testing a particular level, which based on these lines that we have drawn earlier, acting as support resistance, it is testing that level. Don't do it too quickly. Wait, see what happens. Either it will break down. If that breakdown happens, your stop loss is going to hit, or it will reject, in which case your stop loss will not hit.
Can you show me your Friday's trade?
Yes, I will show you my Friday's trade.
I think by looking at trade, I'll understand better.
So here, I had initially shorted the 17,600 put option at 23 rupees. This particular leg, this one which has made me 4.5 lakh loss. You can see this was roughly in the afternoon.
16,600 put option.
16,600 in the morning. In the first candle, I shorted this at around 25 rupees.
At 25, okay.
At 25 rupees.
Okay.
Now, at the same time, I had shorted the call option, the 17,500 call option. I had also shorted that around 25 rupees.
Why did you short 16,600 and 17,500 only?
Because it worked with the same logic. One, as per the whatever is maximum congestion, the straddle pricing, it was coming to around 300. But at the same time, since it is not close to expiry, I want to keep even more distance.
Okay.
On this particular day, I was trading for maximum risk of 4 to 5 points and targeting about 10 points. This was my trade. So this is a relaxed approach because my stop loss very rarely it will get hit. And this day also my stop loss did not get hit.
Okay.
Even though there was a 250 point fall and then from there we recovered and then again we fell and then again recovered. I'll just go over how this trade went.
Okay. Yeah.
So once I shorted this particular put option, from 25 I started going to 30. So I had to square off my 17,500 put option, which was barely giving me any profit at that point of time.
Call option.
Yeah, sorry, call option, and roll it down to 17,450. Once again, the put kept increasing. I booked the profit here and rolled it down to 17,400. At all points, whatever my put option is trading at, I want a call option which is trading at that price or even a little bit more. The thing is, Vivekji, in a down market, even if you have two legs which are the same premium, in case the market reverses, there is an IV crush that happens.
Yeah.
Which will benefit your position before the other bleeds. For example, if the market is moving down and put option is going up in price and gone to 50, and you at the same time short a call option worth 50. If the market reverses, the net value of that 100 will come down first before going up. It is not possible that in a reversal, you don't see that IV crush.
Got it.
IV is rising because of a directional move. If IV is rising because of an up move, in a down move, that IV will come down.
Got it.
And similarly, vice versa. So, in this case, what I ended up doing is I kept moving down my call option. You can see I moved my call from 17,500 all the way till at 1.17200.
So I'll just simplify this for my learners. What was done here, that when you initiated a position and market fell.
Yeah.
So put option value started going up.
Yeah.
And obviously call value started going down.
Yeah.
So you booked profit in call and you sold a call which is equivalent to premium value of the put.
Exactly.
And you kept on doing that.
Exactly.
Okay.
So finally what I ended up doing eventually is that these were the two strikes that I'm on. What I did was, I realized today is going to be a tricky day. This you can see has given me 4.5 lakh loss here. But even then my position was on a profit of 50,000 at that point of time. So what I did was, I'm like, okay, this is too close.
Yeah.
Because market is acting funny today. A lot of big moves are happening. I killed that trade. Because in the first half, it has made me only 2.5 rupees of profit. I'm trading about 20,000 sizing. It's made me 2.5 rupees profit. I removed that trade altogether and instead sold the 16,400 and 17,350 options. I moved my put also down. I moved my call also up. And now this was trading at around 20 rupees.
Okay.
And from here, my idea was this is trading at 40 rupees, both put together.
Yeah.
I'm trailing stop loss of only 2 rupees, the profit that I made in the first half, and target of how much ever I can get.
Okay.
Finally, I closed this trade at a profit of 1.3 lakhs, which means that I made, with the risk that I was willing to put up 2 rupees,
okay,
I've made 6 points. It's a very tight risk management. The thing is, I've gone so far away that it's very rare that one option gains and the other option doesn't give up. That will also happen. And for those days, we have a stop loss. There are people I know who trade trying to capture 30 points plus in a day, but are willing to risk 10-15 points. And they are trading with a smaller capital also, with 50 lakhs, 1 crore. So that time what you can do is, you can actually generate 1%, 2% a day on your capital, or half of that you can take as a stop loss. In fact, if I use hedging benefit, ये जो equation है 20 points equals 1% can be made into 10 points equals 1% if you use hedging benefit. I don't do that because actually, Vivek sir, I'm on a little bit of a break. I'm in a hiatus, but this month, once again, I put up my monthly P&L videos. I've done a good 4%. But the idea is, this is a very relaxed way of trading. It looks a little complicated, but it's very simple. What are you doing? You want the same bhav from both sides. Whichever way the market is moving, if it's moving down, if you can see a steady down market, or if the day is in red, always keep your call the same price or at least little more than your put. In a reversal, you will first make profit before making loss. And in case the market continues to go down, you have complete protection from the call side.
Just give me one clarification that, so in this case only, if the call option was, if the put option was going up and you have sold it, and say it has gone up to 35,
yes,
you initially sold at say 20. So when you sell the correspondent call option again, it should be 35?
It should be 35.
35.
It should be 35 or even a little bit more, because it's a down moving day, right?
Right.
You can literally say if Nifty is showing red today, keep the call at the same price or a little bit more. But that is once you're midday. When you're entering, keep it equal. Right? So it's better. Sometimes you can have a bias also. You can have a bullish bias. You can have a bearish bias. You can accordingly manage those premiums. You can do trial and error. Different people have different styles. But if it goes against you, there's only one thing here. Fixed stop loss. Most of the time it's going to make me money. Sometimes I have exited my position and I've come back and seen that if I had held that position, I would have lost 5%, 10% of my account in that day.
I want to understand, how did you put stop loss here? Because here your position was that you have sell position in 16,600 put and you have correspondent sell position in some call option, which say for example it was 17,200. I'm presuming that's the one?
Yes, this is the one. I was in this position.
Yeah.
This was trading at 44. This was trading at 44.
So if you add all these, so this was basically done afterwards.
This was re-entered after.
Re-entered after. But if you add all these, you are in a loss. Yeah, this plus this plus this plus this would be in a loss, right?
Correct. Yes.
Because this is 47,640. So if you remove this, obviously this will be in a loss.
Correct.
So when you say stop loss, It's the absolute loss amount which is a stop loss?
Absolute loss. Because the same time when I exited, see, I exited 16,600 put. Same time I entered 16,400 put. The same time when I exited 16,700 call, I entered. So it's my stop loss is this basket order that you see here, which has multiple legs to remove everything.
So your stop loss is then not in terms of points. It's actually in terms of absolute number you want to lose today.
Absolute points for the overall position. I can't look at it in isolation.
Okay.
It is not point based on the leg. Something that I short at 20 might go to 50 and my stop loss might not have hit.
Yeah.
My stop loss is on overall. If I'm trading 20,000 sizing, I'm planning today to make 10 points or I want to give up 5 points. My stop loss is 1 lakh then.
Okay.
So that is my stop.
So whenever 1 lakh will come minus, you will just square up.
Yes. I will not wait till 1 lakh minus to come. I'll try to manage it, as I said, by moving. There are two things that can be done, sir. Whichever is the winning leg, you bring it closer.
Yeah.
The other thing is, whichever is the losing leg, you push it further.
Oh, acha. So you keep on booking loss and then push things further.
There are two situations in which I bring the leg closer and move the leg. If I think there'll be a reversal, I don't book the loss and move it away. But I have to manage the fact that the position is bleeding. I feel that after this dip, market might get bought, but it might not get bought also. So I have to move down my call. But if I have a good conviction that, okay, there's high chance we move up and my stop loss is not hit, I will move down the position instead of taking risk off. So it's called risk off and risk on. Risk on is when you're moving closer and risk off is when you're moving further away.
Interesting. Tell me one thing, you have mentioned this couple of times in this discussion that you target something for a day. How do you define that today is a day I want to make this much, today is a day I want to make this much? Through that initial graph study?
Through the initial graph study, that's one. But more importantly, if it is Thursday or Wednesday, those are the 2 days when I'm closest to expiry. That is the one point where IV moves will not affect me too much.
Yeah.
Because it's almost completely about, these are going to expire. If one is gaining, other has to lose.
Yeah.
So those days I target relatively higher targets. So I try to target a 1%. If I use hedging benefit, I can target 2% and more, but I'm not using hedging benefit at this point of time. And there I will have a stop loss of half. Now, if it is a Friday, if it is a Monday, if it is a Tuesday, these are not in my favor because it is not towards the end of the expiry. So those days I take lesser risk. Previously, when I used to trade Vivek ji, and I have videos of this from earlier in Jan, there are days where I've targeted itself at the beginning of the day a 5, 6, 7, 10% return. In fact, there's a video where I was doing really well, so I just kept increasing the return expectancy. It became almost like a 10% return in a day. There are also days
10% of your overall capital in a day.
But I took a proportionate risk. So I took a proportionate risk of 3%, 4%, which I was happy to give up at the beginning of the day, and that was with times of leverage. And there are these videos of where I've lost money also. I think I'm the only one on YouTube who has a video saying I lost 15 lakh rupees today doing this and that. But it all comes down to a very simple concept here. There is a high probability that I make money. I will constantly keep balancing my book. Balancing my book is not complicated. It's about roughly keeping the same amount of money in both my legs. As you do it, you'll get a hang for what to do, and this has to come with practice. This has to come for time. And in terms of how do I know how much something can be worth, in the current IV environment, on Thursday closing or on Friday morning opening, and at the money straddle can be worth, at the money call plus put can be worth anywhere between 270 to 280.
Right.
On Monday, if it opens right there, there is no way that it opens more than 260, 250 to 260 thereabout. On Tuesday, same thing is going to be somewhere close to around maximum of 200 to 220 thereabout. Okay. And on Wednesday at open, it's not going to be more than 170, 180. And on Thursday, very rarely do you see it open above 140 or below 100. So how do I know this? It's not genius. This is basically just sitting day in, day out, observing that this is how at the money straddle behaves, this is how out the money position. Like for example, on Wednesday, if you short two options, put option, call option, both were 20 rupees in the morning and not much happens in the market, by the end, both will be worth less than 10 rupees. So there, if you can figure out that trade and it goes in your favor, it 1%. So what is my, if I'm taking that trade, what should be my proportionate stop loss? 10 points. 20 points I'm getting, 10 points I'll be able to give up. Vivek ji, I can't count the number of times. See, this is a high probability trade. It has to make me money. I'm not genius for making money when it makes money for me. When it doesn't make money, I get out. I get out and I don't look back. So that is only thing that has sustained me and helped me do well in the market, is that I know when to run away. And what I try to do is, one more thing is, whenever, for example, I make a decision to take a stop loss, I brainwash myself to feel very good about it. Today I have booked a loss. I'm very happy I booked a loss, because and even many times, sir, when I book a loss, eventually I look back at the position. If I held it, I'd have made a lot of profit. I've taken a 10-point loss. I would have actually made a 10-point or more profit. But if I stayed on, I convinced myself to feel bad about it. You have to hardwire this in your system. We are, as people, whenever we take a loss, naturally we'll feel bad about it. But you have to brainwash yourself and say that today I took the loss, so I survived. Because there are days, and this is easier for me, because there are days when I go back and I've seen my position. Had I held it, it's over. That's the end of it. There have been days where if I had just held on to my position, there would be completely no account left. So that's that. Finally, this trade, I didn't do too much from here. It didn't take much management. My stop loss didn't hit, and I booked about 1.3 on this trade. So I generally post on YouTube. Lately, I'm taking a bit of a break. I'm traveling, so posting on Twitter whenever I trade.
Interesting.
Yeah.
So tell me a difference between options adjustment and options management. Is there any difference?
So I guess those are semantics.
Okay.
But I think one can be a substitute for the other.
Let me just rephrase this. So there are a lot of people who have different styles of adjustments, right? So I interviewed a couple of them, like Telugu brothers and all. Everyone have their own way of adjustments, because everyone has their own risk framework. So how much weightage do you give to adjustments, or you are more focused on just identifying the risk, and if the risk is there, I will square up the trade. I will not be too much finicky about adjustment. Because I have seen some people who have become so adjustment oriented that they cannot book the loss.
Okay.
Let me readjust. And finally, they land up in something which is beyond their control.
Yeah. So this happens more in positional trading. But like I'll get to that. Let's say I have sold a put option and market is going down. Because of that, I feel forced. Let's say a stock like Reliance, people would have sold 2300 put option. Market is going down. So you can't see the loss. So you feel like, okay, you have to sell call option in order to protect that put option, little bit credit you're getting. Now the market reverses. Now that call option is bleeding. Now again, you have to sell put. You keep making adjustments on both sides. And invariably, a lot of people will finally, provided you have allocated the right amount of capital. If you are a structured trader and you have allocated initially a small capital and then you can control it, it is a must. But the way I look at options management, if somebody is using their entire margin to come and short options with barely no hedging, then that is a disaster waiting to happen. So I don't know if I'm getting around to the question properly, but basically adjustment is necessary, but we have a tendency to always over adjust, and sometimes adjustments can do more harm than they do good. Right?
So you're saying this basic level adjustment is required because that should be part of your model.
Absolutely.
But then after a point of time, if you have defined the risk per trade,
yes,
and if that risk level has reached,
correct.
I mean, your tolerance has reached there. So you should just square up. Then you should not still fight with the market with adjustments.
Absolutely. Because see, the idea is I might have a bias, but my trade can't have too much of that bias incorporated. I will do whatever. To be honest, Vivek, I'll do whatever. I'm taking a trade which has high probability to win. I might have a bullish bias, a bearish bias. I just know that I'm getting out here. I'll make adjustments. Still, I am losing 1 point, 2 point, 3 point, 4 point, 5 point. Once that 10-point limit is hit, it's over. It's like you were given X amount of chances to fix this. You have managed to keep it alive and not make your stop loss hit. Fine. If your stop loss is hit, you're done.
So that's stop loss. But tell me, how do you book profit?
So booking profit is a trading. So generally what I do is, let us say I'm targeting 10 points for the day.
Yeah.
After 8 points, I start a trailing stop loss of 2 points. See, until I make an 8-point profit, I'm just going to let the position to keep adjusting it. Still, man, even if the position is profitable, I will still adjust, balancing the legs. Once it reaches an 8-point profit, I start a trailing stop loss, 2 points. My new stop loss is 2 points. And what I'll try to do is, if I'm very close to the market, I'll move further away.
Okay.
I'll even further increase the probability of that trade not losing me money. Forget making money. I've made basically my target, and by moving away, I can still make those 2 points. I'll do that and start a trailing stop loss.
And your quantity will still remain the same?
Exactly the same.
Even though you move out, your premium inflow is lesser,
Yes.
but your quantity still remains
Quantity
the same.
remains the same. Actually, which strike I'm on and how much premium it has doesn't make that much difference.
Okay.
It's only about how much it's going to lose as a value of itself.
Okay.
So, what happens is, over a period of time, we see many times that we have a trade that goes into green, and then finally from green goes to break even or zero.
Okay.
So, to avoid that, once I know that this trade has already given me what I've expected, almost about 80% of that, start a trailing stop loss.
Okay.
There's no way that I'm made 8 points and from there I'm going to end at break even that day. If I made 8 points, I'm going to minimum take home 6.
Got it. So you say, I mean, let's come back to that action plan for the day. So you initiate a trade after 15 minutes of the market.
Yes.
So when will your trade typically square up? Would it be around 3 o'clock, or whenever you get the trailing stop loss hit, you square up the?
Either of those. So generally what happens, and some days if it is especially Wednesday and Thursday, you can make a lot of money in the last 45 minutes. There can be, because people who have gone long those options knowing that it's expiring the next day on a Wednesday, for example, on Thursday anyway it has to go to zero, they have to start dumping it. They have to start getting rid of it, and that is when you can make good amount of money. But even then my trailing stop loss is in place.
Sure. So
in fact, Vivek ji, I'm glad you asked this because actually this is where my trailing stop loss hit. At this point of time.
And what was the time that time?
Yeah, I'll just go. So the tweet obviously came a little bit after that. Where do we see the time here? So anyway, maybe we can see the prices. Yeah, we can see the prices. So I exited at the 16,400 and 17,350 at about 37 rupees.
When?
Around
and that
the
was
afternoon. Yeah, around 1:30.
That was your trailing.
This was my trailing stop loss. Yeah, 1:30.
Which was basically your trailing stop loss, which pushed you to square up the trade.
Around 1:30. And you look at what about here, exactly about here, around 1:30.
No, my question actually was, I was just trying to read your mind that, are you looking at chart also to decide when to exit?
Yes.
You are?
Yes. So what happens is, here, for example, as we are starting to take out 17,000 at 1:30, this is where I've exited.
Oh.
Because till here I was managing my position, because whatever put side IV increase was taking place, the call side delta, the call side value that was being given up was managing. Now, once the put side IV has crashed, once we've come to 17,000, the puts have given me a good profit because whatever they gain, they've given up. Now from here, calls are going to start increasing. And at this point, after already the puts have given value, I can't move up my puts further. So the risk reward for me becomes bad because already the position has given me a good profit. Now there is this new risk of this expansion happening here.
Right.
If you see the same 17,350 on that particular day, right? So around 1:30, I've exited here at around 20 rupees. From there, it has shot up to 30 rupees. It would have given up all the profit I made. And more so. Yeah. One more thing that I pay a lot of attention to is what is the average traded price on that day. For example, we had said earlier that we will be shorting the 16,700 put option. The average price that it was traded today is 46. The current price it's trading it as 28. I always want this ratio of average current price to be below the average price. I'll tell you why. Many people have bought and shorted this option today, intraday. Now, as an option seller, when is my real threat? When short covering begins, right? As long as this average price is higher than whatever the current market price, I'm happy to be short.
Okay.
Like when I'm talking also about do I take risk off, do I add or move the other leg? For example, if this starts expanding, I will not risk off on this. I'll instead move my call lower because this is still trading below its average price. The same way here at this 17,300 call. So from our entry, we would have actually been in a 3-point profit. At that point, both were trading at 27.
Okay.
Now at 54. Now the value between the two is 51.
So is this one also trading below the average price?
So this one is trading above the average.
Above the average. So what are you doing this?
So the threat for explosion is on this one. So this tells you which side to be afraid. If the put is trading below its average price, but the call is trading above, then you know that the real threat is from this blowing up very quickly.
And obviously the chart is also suggesting a breakout, so it can actually go up.
Absolutely. So price action, naturally, for example, anyone who was short here, right? Once again, it's coming back to this particular level, but from here, it can once again break out. So that's always a possibility. Yeah. One more thing that I do, Vivek ji, is I have shares. I have accumulated, I've told you how I've accumulated shares. Against them, I sell call options every month. So I receive some or the other money from those shares. So if they don't go up, and if they do go up and my call option is losing money, I have enough margin from which I use basically for intraday trading to manage these positions.
So if suppose you have, say for example, ITC 240 call you have sold.
Correct.
3,200.
Yeah.
How much shares do you have?
I have almost 4,500 shares.
That's why you sold 3,200.
Yes. So if the ITC shoots up, I have more shares that will benefit more than the call option.
So typically you will not sell more call option.
Never.
Only how much share you will sell. Okay.
Maybe this is my paranoia a little bit, but anything that I have overnight is 100% hedged.
Okay.
I will not have any F&O. Yes, my portfolio, you can say it can move down, but that's unleveraged. That's not leveraged. I don't want, my idea is every day from the market, I will either make what I intend to, or I'll give up what I intend to. I'm in control. Nobody can take something from me that I didn't plan to give you. And doing this, Vivek ji, you can aram se generate a good 3, 4, 5, 6%. If you use hedging benefit, some months will be much better than that. And you are very much in control of how much you lose. Doing it this way. The same thing many people say you can do by selling 2,000 point away call option, 2,000 point away put option in the beginning of the month.
Yeah.
But I don't have that risk. Like if it was that simple, I would take all my margin and do that instead of struggling every day to make a little bit. And some people are not excited. The thing is, a lot of time people want that excitement that I made 5%, 10% in a day. I don't get excited by this. I will make my 0.5%, 1%, or I'll give up my 0.25 or 0.5%, and that is my day. So, yeah.
As they say, small is powerful. So these small numbers, 1%, 0.5%, looks very small, but it has huge compounding benefit.
Absolutely adds up. Like people can think that this is too simple. How does it make sense that you just keep balancing both legs and somehow that will make you some profit? It's not exciting. This financial year alone, I've managed to do about 60% and more just doing this. And you will have periods where it will go very well for you. You will have periods where again and again your stop loss will hit. What I found works for me is if I'm seeing that markets are a little difficult to manage, I will reduce my size.
Okay.
If the markets are going well in my favor, I'll increase my size. And that goes to the trade also, Vivek ji. For example, 10 points is my target.
Yeah.
Today it has gone in my favor. I've got my 10 points. I'll try to get 15. I'll move closer and I'll try to get 15. I'll try to get 20. If it's going in my favor, I'll push it. But if it's going against me, I'm out the door the moment.
So there are days when you are basically out of the market after 11 or 12 and not doing anything?
Many times.
Okay. And there are days when you have lost money?
Yes.
So out of, say, a typical month, how many days you'll make money, how many days you lose money?
So I would say it stands somewhere around 75-25. So 1 out of, or maybe 70-30 there about. 1 out of 4 days, 3 days if I make profit, I will lose. Actually, we can we can see that also. So, I mean, if you can see, this is what I talk about, right? Mondays are generally never going to be in my favor. So you'll see quite a few.
That's why you don't trade on Mondays. But Fridays also has not been great.
Yeah, Fridays also have not been great. But the thing is, if you see the quantum of loss, it will be relatively low. So, of course, there are some Fridays where it has been quite big. And sometimes I don't get to control it because I also have slippage. So, Vivek ji, I've had situations, you won't believe, where I place an order at 50. And because I record my videos, you can see the risks of doing this. I place an order at 50, it executes at 75. Now, if I'm trading...
Oh my God. So much slippage.
Yeah, because the thing is my order sizes sometimes, if there's no liquidity, they will really stretch.
But even in such a close strike price, you face liquidity issues.
If I want to move about, let's say, more than 10,000, 20,000 at once, there are...
Square one and then get into the other.
Exactly.
So is there any tool which allows you to do both the things together?
I use software that's been developed by my friend.
Okay.
So I'm using that particular thing. It runs on a Python code, works on the APIs, wherein I can very quickly switch between strikes. It's difficult to, I can't manually punch.
Yeah, it's so difficult.
Orders.
So that's what algo trading is all about, where
Yeah.
you can get an efficient execution.
Yeah.
Where all these standard manual trading platforms will not provide you that.
Correct. Yeah. So it's, I mean, at the end of the day, execution is very important, and I will pay as much attention to it as it can. But still, it will go wrong. Hey, I'll give you another example where there's something I cannot control. The day NSE shut down, I made a 15 lakh loss on that day because it opened. Now, this is trading. There are things that you can't predict. The market opened at a point where I was not at my desk because I thought market timing is over. I'm going to go home in my car. Suddenly, the market is opening. I'm getting the news. I'm unable to square off my position because my broker's software, it's not running.
Yeah.
I square off my position and my call options have gone 5-6x. And you can't do anything. That's the cost of doing business. There will be things you cannot control.
And obviously, there are multiple occasions when a broker is down and there is hue and cry.
Absolutely.
So people have to understand that's the part of this business.
Absolutely. In fact, but we cannot make excuses also, Vivekji. Like I noticed this about myself.
Yeah.
I also make excuses naturally. My broker stopped working one day when I'm trying to square off a position. I have the entire video. I'm trying to, it's expiry. I'm trying to square off a call option. Market is moving up.
Yeah.
My order is not getting placed.
Yeah.
It's gone from 3 rupees to 15 rupees. And that's when I realized I made a mistake. I had an alternate broker previously. I had my old ICICI Direct account. I would use it to square off. It had just enough capital to buy back a position.
Okay.
But I'd shut it down thinking, why to have that one? Now I've reopened it. So if this broker breaks down, I need to have a second broker ready to go. So I have put that redundancy in place wherein such a situation doesn't happen to me again, that I am in a position and I can't exit it because of the broker. Because the broker is not going to pay you back. He's not going to give you the money back. So
especially considering the brokerage now people pay.
Yeah.
Broker will not take that liability.
Absolutely.
If I remember, I did see that video.
You
were very annoyed with the broker, no?
Absolutely.
Yes.
Absolutely.
It did go viral.
But then I thought about it later and said, no, I'm making an excuse. I'm blaming him.
Yeah.
Regardless of it being their fault or not, why did I not, in my office, I have multiple internet connections.
Yeah.
If one goes, I connect to another. If everything else goes, I have my hotspot.
So people always talk about financial risk. People don't talk about operational risk.
Absolutely.
And having multiple broker or having multiple internet connection, having multiple laptops, all these become part of your risk management strategies.
Absolutely.
Fantastic. It was such an enriching interaction. I think we are here almost for the last two hours.
Yeah, absolutely. No, it's been such a pleasure to be here. And, the whole idea here is, I want to put it as simple as possible. It's not difficult to make money from markets at all. But you just need to know very clearly that whenever it goes against you, you have to get out. I mean, there are people who do extremely well in trading a certain style. Like I know friends who trade opposite to my style and they do very well and make money. They do what is in their comfort zone. They define their risk and reward. So they know in a day, this is how much I'm going to make, this is how much I'm going to lose. And that is the only way you succeed. You have to cap, right?
Correct.
And you have to be in control. You can't be in a fallacy that you just, take all your margin, carry stuff overnight without fully comprehending that risk, and that is going to make you money. It'll work for a long time, but it's a ticking time bomb. And I'm saying this so people really go back and look at what they're doing at times. So.
Absolutely. You need to be in control whether you are driving Maruti or Ferrari.
Absolutely.
Yeah. Otherwise, both can be very counter reactive. So anyways, thank you. It was fun interacting with you, and I hope to interact with you further. We also do ELM live sessions on Wednesdays. So one of the ELM live session, I would like to invite you and take questions from our learners, because this has been quite an action pack and I'm sure a lot of you will have relevant questions. So we will do ELM live with Shreyas very soon. Thank you, friends, for staying till the end. I always appreciate people who stay till the end. It's a small percentage, but those are the guys who are serious. Rest are seeking for entertainment, and we are not entertainment channel for sure. Thank you
so much
coming all the way from Bangalore only for this. Really appreciate. And Shreyas does very good work on that YouTube channel. So you should search for that channel. Just search for his name on NiftyBN is the name of the YouTube channel. I wrote it down because I didn't want to make mistake. You should search him there. And He has less subscribers but serious ones. So if you want to be serious one, you know what to do. Thank you.
Thank you so much, Vivek.
Thank you. Bye-bye, friends.